Okay, welcome to another episode of LIMRA Unplugged. I am your host today, James Scanlon, Senior Research Director at LIMRA, and I'm here with Maggie Leyes from Life Happens. She's Senior Vice President of Content. Maggie and I were here today to present findings from the 2019 Insurance Barometer study, which we do every year. Most useful coming out of this study are the hot topics, right? So Life Happens makes a lot of use out of that information, correct?
Right, and that's part of the reason we spent so much time thinking about what we were going to ask this year, right? What we were going to explore. So we have simplified underwriting, combination products, and we did a deeper dive on social media.
Let's start with simplified underwriting. Okay, I think that's our first hot topic. Let me share some of the high-level results if I can remember them. So we had the topic in the study last year, 2018, and 2019 as well this year. We saw a slight decline in the likelihood to buy through the simplified underwriting process as compared to traditional life insurance processes. The appeal of the market is still very strong. 47% of all American adults indicated a likelihood to buy through simplified underwriting as compared to traditional underwriting. That equates to over 100 million American consumers who say that this product, right, the simplified underwriting process, has benefits that appeal to them directly. So that's really a profound finding, saying that, you know, a market that large exists for a process like this. Can you share some of the information on some of the specific benefits that they like about the simplified underwriting process?
I think fast and easy. It shouldn't be surprising in today's culture, right? Instead of waiting for weeks or months with traditional underwriting, you get something pretty immediate. So 2/3 of people said that that was something that they found valuable. Other valuable parts to simplified underwriting, they don't have to go to a doctor. They don't have to give up bodily fluids, as we like to call them in this industry. And transparency. I think transparency is something interesting that maybe we don't spend enough time in this industry thinking about. It's big in the retail industry. Millennials really want to know where their products are coming from and how they're priced, and simplified underwriting really aligns with that in our industry.
Yeah, and the numbers certainly support it. So we've discussed simplified underwriting. Let's move on and talk a little bit about social media in the financial services space. So social media is, as many people know, it's already an integral part of American society, but it's becoming a more integral part of the American economy. So can you tell us some of the results from the barometer relative to social media in the financial services space?
Sure. This is the second year that we did this, and there was a lot of interest last year, so we wanted to take a deeper dive into it. And we know that 1 in 5 people are looking for a financial professional, but when you dive a little bit deeper, you find out that they're using social media to find out about these financial advisors. So about 1/3 of people are going to use social media when they're looking for a financial professional. That's a lot of people. And when you look at millennials, I don't think this will surprise anybody, but you're up to 50%. So that's the number is at 85 million Americans are going to be using social media for financial services information and information about financial services professionals.
I found that information very useful because it shows how generational impacts really make a difference. So when we're seeing that millennials and Gen Xers are much more likely to use social media in financial services, what are the inferences for financial professionals more specifically?
Well, if they're looking to work with younger consumers, right, they can't ignore it. It's something that they have to use. And interestingly, the barometer showed that when we asked them about which platforms it was pretty evenly spread out. So I don't think you can really ignore any of the major sites, although Facebook and LinkedIn were at the top, as well as Yelp. Again, social media, people are looking for what other people have to say,
Right.
and so reviews are important.
And so a place like Yelp is different. It's not posting my content there.
Right.
It's you want to encourage your customers to go to a place like Yelp and fill out positive evaluations or place favorable comments for you. It's basically the modern version of an old-fashioned personal referral.
Right, and you want to make sure that nobody's saying anything negative about you as well.
Right.
So
Understanding both
right.
the positive and negative depictions
Correct.
of you in social media space is extremely important especially for financial professionals.
But I think what these numbers underline is the importance of companies and financial services professionals paying attention to social media. It's only going to grow.
A third topic this year is the combination life market. This year's data indicates 17% of American consumers are interested or likely to buy a combination life product versus a traditional life insurance product, which is a very strong barometer for that sector of the economy. Can you review some of the reasons why consumers are buying these combination life policies?
Well, a third of consumers said that the long-term care benefit is important because they're worried about depleting their savings and any retirement nest that they have. So that was very important, as well as the concept of living benefit, right? That potentially they could use it while they're still living to address long-term care. And then just the fact that they could potentially be saving money by combining the two products instead of buying two separate policies.
And that's very unique to that product sector, right? Because there's not that many other types of life insurance products that offer those same types of living benefits, and that the idea that a benefit can be paid out during an insured's lifetime is simply not something that a lot of consumers are aware of. So that's new information for them. Yeah, no, I agree. I think that's very interesting as well.
Are there reasons that they're not going to buy it?
I was just going to
drum roll.
Yes,
for
drum rolls. As for as many reasons as there are that people do buy
Yeah.
life combination products, there are some very traditional reasons why consumers are avoiding them or objections that they have. And these objections primarily boil down to it costs too much or I can't afford it. So obviously there's some overlap between these. The idea that something may cost too much or that I may not have enough money to buy it, to afford it, is not unique to combination life products. Those are the top two objections given for any other type of life product or pretty much any other type of insurance coverage. People think it's too expensive. They can't afford it. While that may be true, we don't want to make light of the fact that some people are challenged economically. A lot of what's driving those responses, in my opinion, is the fact that people overestimate the cost of coverage on a regular basis. People will overestimate the cost of life insurance by up to 3 times its cost or more. And that the younger a person is, so like a millennial, there's almost half of the millennial market that overestimate the cost of life insurance by almost 5 times as much. So what I think is interesting when we look at these results on the combination life products and the reasons that people don't buy them, well, first of all, they're not unique reasons. And second of all, some of these reasons, while they may be legitimate, people may not have money. We have to acknowledge that. A lot of it simply may be based on misinformation. They might think that the cost is actually much greater than it is. So bringing out that information to the consumers to have them give them a better understanding of the true cost of coverage may bring even more prospects into that combination life product.
Start to close the education gap about what the products are and what they do. Hopefully we can increase ownership.
That would be great. That's our job. Thank you very much, Maggie, for coming today.
You're welcome.
It's been great. Thank you for tuning in to another episode of LIMRA Unplugged.